Hello, everyone, and welcome to live trading of global markets with professional trader John Netto. Our moderator today is Doug Jansen. I'm just going to briefly introduce Doug and pass off the session to him. Doug has been a product specialist with CQG for the last 14 years. He's been trading for more than 20. He also designs and trades algorithmic systems. So with that, I will pass this off to Doug and John.
Thanks, Betty, and welcome everybody on board for this early morning session with John Netto. As Betty has said, I've had the ability to work with many of the industry gurus out there, and over the years, I have helped out with many seminars, and in addition, many of these gurus have traded throughout the seminars. It's been rather humorous to watch a one lot make them sweat. But today we're certainly going to change that. John is going to be trading live. I've known John for a number of years. He has not only educated many traders out there, but he trades as a full-time trader, which is a breath of fresh air. And so we are going to spend the next hour and a half with John, watching his trades this morning through a few numbers that are being released. And we will go ahead and I will move this over to John. Good morning, John. Welcome on board.
Hey, Doug. It's great to be here. As Doug had mentioned, there's a couple of key numbers coming out today. First of all, I'm John Netto, president of the Protean market. This is these events here, the chance to trade, is something that I love doing. I have a passion for doing, and something that I really hope provides you, the viewer, with some insight today. Let's do a quick background here, because the crude market's just open, and I actually am watching to see how crude trades off of this opening breakout range. So maybe if we can just get to the desktop share part, I'll go over the formalities later on. So we can share my desktop monitor. 5. Boom. Okay, let's go to 5. All right, cool. Doug, you can see my desktop now, right?
We're just coming on board. There you go. We're up and running.
Quickly, guys, my position so far, I've been active so far this morning, definitely traded. If you look at the times of my fills here in the lower CQG section here, let's get this situated. Woke up and started working at 6 o'clock in the morning, and really think that the market, at least from the fixed income side, is poised to flatten today. We have the Fed coming on later on today at 11 a.m. Eastern time, purchasing some 30 years. This coupled with some of the weakening economic data that came out later today, to me suggests an environment of flattening. So have been playing long 10, short 5s and working that spread throughout the morning. Still in that right now, long 21 10-years and short 33 5-years. Also, we have a dynamic setting up in the between the S&P and the Dow Jones Euro stocks. We have, as most of you guys know, we have options X tomorrow. So I'm along some S&P futures right around this. Crude, let's see if we can get a breakout here. All right, so I'm looking right now anyway, crude after trading opening range lower. To me, I think that crude has some upside potential today. So as you can see from my order here, we're working the 5-lot buy stop above the overnight or early session highs from about an hour ago. And if that goes, I think we got a chance to pop up 30 or 40 cents fairly quickly. As that market to me seems poised to make some considerable moves higher. I think that looking overall, if you want to watch the trend in equities, there's a couple of aspects at play today. Just looking back at that 8:30 data that we had from the Empire Manufacturing, it's very difficult to ascertain, at least decipher what came from the claims data. A couple of states, I think we came up at 400-something thousand, 400+,000, which caused, of course, there was some headline risk there. But net, I'm not sure the market's going to give that too much credence just because of some of the reporting problems that came from Sandy and the hurricane. But in terms of what we're seeing with some of the other data, I think it's very conducive to at least allow it's not going to do anything to stop the Fed doves from at least more vigorously, continuing Operation Twist. Of course, those of you who saw the release of the Fed minutes yesterday, at any rate, all those things factored in, I think we have a very unique dynamic where we are poised to see the S&P rally. The Dow Jones Euro Stocks on the daily chart is up against some support, and I think that if the S&P does sell down, that the Euro Stocks can really puke just based on one more day of Spain not coming to the table for a bailout. So we have a couple of variables at play right now which I'm looking to work. I think the crude to the upside. I think that the S&P relative to the Dow Jones Euro Stocks around this level because of the gamma built into the 1350 on the SPX cash are all factors to play that. And then, of course, with the Fed purchasing, which is, of course, known by the market, the long end of the curve later on today.
Postal Service sees $7.6 billion loss in fiscal 2013.
All right. The Postal Service losing more money. As you can hear in the background, I have Trade the News going. I have Rand Squawk going on. Listen to both of those news squawks very actively. I have Bloomberg on as well. And then I execute through CQG. So try and really go around and just take advantage of the different services that these providers offer. So that's sort of how we are poised right now. Currently, seeing an S&P here, moved a little bit off those 1350 lows. We spiked that 1350 low yesterday. Go ahead and put up an S&P chart here. And yeah.
Hey, John, let me interject here. That's certainly quite an overview, just getting into the early morning hours here. We will be taking questions throughout the hour and a half. Normally we hold them off to the end of the session. And if anyone online has any problems with the audio or video, please use the chat feature in the WebEx, and me will try to help you get that straightened out. So, okay, go ahead, John, and let's.
Yeah. So early on, just kind of running through the trades. Like, actually, Doug, you made the comment that it's interesting, that we're up early here. Like, man, I was sort of hoping we could start this webinar around like at 7 a.m. Eastern time, to be honest with you, and like run it for like 4 hours and just like really get into it. But being with the logistical aspects, I'm thrilled that we get to do it for over this 90-minute time period because there's a ton of opportunity which should be setting up as a result of that. So just getting up early, like I talked about, if we look at 6:20 Eastern time, kind of begin to work some positions in terms of like just thought that any kind of bounce would create some, at least in equities or in risk, would allow me to come in and get short. We've seen over the last month just how much real money selling has happened during U.S. equity hours. Sort of any kind of lift overnight in Europe. You come in the next morning and they definitely have been leaning on the bids, at least on the equities for the last month or so. So we come in, obviously look at some of the times, they're 8:14. Also, again, working some of the long end of the curve I was talking about, and working to this. Actually got, again, that jobless claims number, which is very fortuitous because, again, I don't put too much stock in it, but if there's a chance to come in and provide liquidity based on how an economic number sets up, then I want to go ahead and do that. So that provided a chance, again, with that economic number. Right after that economic number, end up working some of these positions out just briefly, and then I look to reposition accordingly, which as we did come back and test that 1350 level, I think that you have, an opportunity to ultimately see the S&P outperform the Euro stocks over the course of the next really 24 to 36 hours, at least up until we begin to get a sense of what's taking place with the White House meetings going on between various congressional leaders. Moving, of course. Go ahead, Doug.
I was going to try to catch you on a pause here. First question that just came through is if you would go ahead and repeat the news services you listen to, and maybe why you listen to them.
Sure.
I pretty fast.
For starters, I use a Bloomberg terminal, which I think a lot of the audience, fairly sophisticated crowd here, is familiar with. Just naturally, when it comes to economic data and when it comes to analyzing any sort of global macro strategies, that's almost a must. I also use Trade the News, which is an audio squawk service, which runs 24 hours, and then Rand Squawk as well. Both of those guys, there tends to be a lot of overlay between those two, but I think Rand Squawk has a very unique and European perspective, very global macro, and Trade the News is a very, very strong U.S. equity perspective. One's out of Europe and one's is here in New York. So when you hear any voice going on in the background, if you hear a European accent, it's probably Rand Squawk. If you hear an American accent, it's Trade the News. And if you hear a female computerized voice, that's a Bloomberg hot headline that's coming across. That way, if I'm working positions, I can at least hear what's taking place and go from there. I hope, did that answer the question, Doug?
I think you covered it rather well, John. So, yeah, let's go ahead and keep reviewing what you see as in a micro and macro plays for your trades today.
Sure. Again, I didn't get into the slides. I'll try and get that later. But for me, I mean, obviously, number one is generating P&L and conveying that to you guys in real time. The audience here has I think has an understanding, and because I think most of the audience watching now are traders themselves, so they can appreciate how I'm trying to analyze and dissect some of these market movements. So net, I do think, though, however, that even though I'm working the spread right now, if the first pop we get in the S&P, if we get up to 59, 60, 61, I'm definitely looking to maneuver out of a spread trade and work back into just being short risk outright. Conversely, if we begin to move a little bit higher, upward to the top end of the 134, 134.02 in the 10 years, and that curve does begin to flatten like I suspect it will, I think there's a chance there to provide some liquidity and work from those positions as well. The market sometimes takes a little bit longer to process information. The Empire survey, which we got at 8:30 Eastern time, was really the first bit of data post-election. And so the employment component in there was negative, and I definitely think that very slowly will be processed and have a play. Also, technically, with what's taking, or at least structured with what's taking place in the fixed income market today, that's conducive for this curve to flatten. And then, of course, with the S&P, that's what I'm thinking. And then crude itself is its own dynamic. Obviously, if you want to take a look at the TI Brent spread out there, let me see if I can get that bad boy in here. In fact, let me switch my desktop so I can sharing. Doug, if I stop sharing and then share again, will that let me choose a new desktop, or can I rotate the screens around so I can? Because I'm on 8 flat panels right now. So let's see here.
Yes, that is correct.
Okay, so I'm gonna stop sharing. I'll be back briefly, guys, and I'm gonna start sharing again my desktop, and let me get it. Boom. Okay, boom, 4. Okay, cool. All right. So as you can see now, this is what I call my global macro review right here. I come in and between the equities that I watch, spot forex, currencies, fixed income, ag products, energies. There's a lot of potential there. What's also important to note is that when we're looking at my fixed income products, there's a lot of the ArbSoft software that I use helps me analyze from a futures to futures basis how I can put the spread on. So when I talk about 44 basis points, if I didn't have the ArbSoft software, that would not be it won't be possible for me anyway to make that basis point computation. And for those of you actually who are a little unfamiliar with what I'm talking about, CQG has a webinar in their archives from January of this year where Bill Campbell, his ArbSoft software obviously supports CQG, goes through a number of functions and functionality of his software. So when you were looking at my last chart here, let me go back to that bit because that's a really important concept and point I'm trying to touch on. My desktop. Okay, 5. Boom. Okay. So just really quickly here, guys. This is when we talk about the fight spread that I'm in right now, and I'm using the futures. There's a different basis point reading for those of you not familiar with Treasury trading or spread trading on the Treasury curve. There's a difference when I'm trading the cash on cash products. So ArbSoft lets me from an apples to apples basis, and again, I'm not some 20-year bond veteran when you hear those guys talk and they just but the book that I'm writing, The Protean Market, does have a couple of bond guys in there, and they really translate the stuff to English for me. And so when I talk about my perspective, crude, come on baby, pop. When we talk about my perspective on the markets in terms of how it plays out in the fixed income space, Bill Glenn is writing a chapter of the book. Bill Campbell's writing a chapter in the book. I spoke with Bill this morning as I try to most mornings and read his brief to get a sense of just what some of the supply-demand metrics are within the fixed income market. Jason Roney from the Gelber Group is someone who I have an immense amount of respect for and always try and get his opinions on things when it comes to the market as well, and he did a great job pointing out to me this morning a lot of the gamma built up in the SPX at 1350. So kudos to Jason on that, and I think it makes a lot of sense, and it's that along with some of the real money metrics that are taking place right now are very conducive for a long S&P short Euro stocks trade, and we'll see how that plays out over the course of the next 3 to 6 hours, and then into tomorrow as well. Especially once all that gamma unwinds with options X tomorrow. And I will actually be in Las Vegas when I'm done with this. A few hours later, I fly to Las Vegas, so I'll be keeping an eye on the overnight market and see what takes place there. Also, one thing to keep in mind, just again from a global macro geopolitical perspective, is, as I mentioned earlier, what takes place. When is Spain ultimately going to ask a bailout? We're seeing Spanish 10-year yields right now close to 6%. I'll obviously be keeping an eye on those. Spain really, I don't believe, wants to have to come and request aid right when they're near the choke point. But net, if they do, in other words, as long as they don't, to me, there's a potential for this long S&P short Euro stocks trade built on top of the other aspects I talked about to begin to go the other way. Europe has really outperformed U.S., especially during U.S. hours, over the last, really since August, since Mario Draghi came out and really said he'd do whatever it takes. And so there's always stories within the market and stories within stories. So net, I know I'm speaking really fast, but this is kind of how I think when I'm trading and processing all this information. Doug, ask me a question.
And John, when we get to a point, and I've sat with you a number of times, that if you would visually give us not just the fundamental picture, but when you got the fundamentals lined up, what you would do visually. Show us some, what works in John's head in terms of setting up the execution on a trade now that you've got a feel for where the fundamentals are lined up.
Sure. No, both are absolutely imperative, and I use, again, like a classic case of that is looking at what's taking place in CL right now. Okay, so now that I've sort of demonstrated some of the ARB soft functionality, I'm going to go back to my global macro chart and take this in a more technical direction, because you can talk fundamentals all you want, but it's not just fundamentals. I'm much more of a short-term catalyst trader. So understanding the Alex, make sure you call out when crude gets to 87.20 if I'm running my yap and I'm not paying attention. Okay. So if you keep in mind let's see, go share my desktop. Boom, 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 make it smaller 4. Yeah, monitor 4. Okay. So, like we talk about technical perspective, we take a look at crude here on this chart, okay? This is a market which has exhibited considerably tight range. And one indicator that I like to use is the ATM. Rick Knox, for those of you familiar with him out there, really robust indicator on CQG. He I believe, worked with CQG for a number of years, intimately familiar with the software. We have a market here that, in crude that you look at this consolidation that we've had, and you keep in mind that the strength of Brent, crude's going now. Let's see if we got enough to break through this morning range here and give us a run. What do you got for us, crude?
17 high in the last few minutes.
I know, it's
18.
fine. Here we go.
Through 20.
Okay, well, they took us in, stopped us in there. We're back at those highs. We're not breaking through yet. Hanging out here. All right, we'll see where that.
What highs are you looking for, John? Here.
At 87.25 on the Jan contract here. I put a 5 lot right there, and they came in, and as of right now was a high tick on that buy there. Market feels pretty strong right now. I think we're in good shape again to move 40 to 50 cents higher here, at least in the short term. Just based on some of the technical metrics and the overall environment that we're in right now.
And I didn't see from the other screen. Was it a 5 stop?
Yeah, you look at the fill right here. I'm sorry, you don't have that screen open. Look at this blue here. There, that's me right at the high tick, like a champ. Which happens sometimes in this game.
Well, it's better than working a limit and watch the market get away from you.
Yeah, it's okay. It's all good here. So at any rate, like I was talking about, so from a technical perspective, I think that crude can move here. I'll go ahead and just run some risk here, just put some stops back in lower around these levels. Don't really want to see it get back below this. If it does, I'll make a call from there and sort of see how I manage it. Key is just kind of size yourself appropriately and go from there. Although if we do go higher, I would like to press this a little bit. if we manage to break above these highs here, I think we have a chance to really pop. So I went ahead and put another order, and you can see me with this 3 lot right here. Just again, like you don't need to be like 20s, 30s, and 40s necessarily right, if it's not right there, given this market. But we'll see what happens. We got 10 minutes of U.S. equity open. They've come up and tested this high here.
So we're working another buy.
Working another buy stop above these highs. To me, there's a potential for us to, if we hold these highs here, to really move. If we hold this level here and they begin to head up higher from here, I think we can rally, like I said, 40 or 50 cents up. If not, I'll take a loss and get out. You can tell from the trades I've done already that won't be the first time that's played out that way.
John, how do you feel about trading in front of the index's opening? I notice there's a lot of gyrations we get the first few minutes when the indexes come on board in the other markets. Do you even look at that or not concerned?
It's all context. You can hear Rand Squawk talking in the back right now, going through some of the. Okay, so there's some very specific stock news coming from Rand Squawk. They're not necessarily my concern, but I still like to be aware of what's going on. Yeah. In terms of your question, it's all about context. Like crude's near a pretty big spot in terms of I think where it can rally. If it doesn't rally and pulls back, then so be it. Otherwise, for me, I want to just make sure I'm exposed. And you could say, oh, why do you put it one tick above? And again, that's a feel thing. And the fact that it broke past its pit opening range, and sometimes if you put above new highs, you end up getting filled 10 cents worse or 15 cents worse on some moves. Other times, if you wait, you end up being the high tick. So it's all, again, about the context of how you're going to work that position, and, of course, being sized properly so you can take a little bit of heat and wiggle as the position works itself. Looking up at the S&P right now, nice little bounce up that 1350 gamma level. We actually bottomed down the futures at 1349.50. Let's glance over to the S&P here. Yeah. I'm going to peel some off of this. I'm going to take a little 5 lot off. I'm going to be a little more direction now. Especially I'm long some crude right now, too. Okay, took some S&P off. You can see a little bit in there. So now I'm technically a little bit short in terms of the ratios between the S&P and the Euro stocks. I talked about, playing, early on. Probably see some U.S. equity weakness. We're getting up to the open here. Got a 5-point move off the lows. Just a feel thing, and I'm going to maneuver and work that position throughout the morning. Again, I'd like S&P to outperform, but I also want to be aware of just part of the ebb and flow of the market as well.
All right, we have our crudes hanging in at 16 right now.
Yep.
17 offer.
Yep.
7 minutes to the index is open.
Yep. So this is it, and that's this is and then this process just continues throughout the morning, and throughout the night, throughout the afternoon, and throughout the weekend when the markets are closed, and starting Sunday night and really going to Friday afternoon, and then if I'm in Las Vegas, continuing over to that table there. So 87.10 is a big level right now. Another guy that I work very closely with, Robert Baxter. Really sharp market structure guy, has a lot of robust analytics. He's also writing a chapter in the Protein Author. I really want to see this market hold 87.10 after that test. If it doesn't, I'm probably going to puke these things, and that's the way this is going. Yeah, and we're done so. So now back to 1 lot again. We'll see if we can move higher. So that trade didn't work out.
Let's visually put that on the screen, John.
Okay, I'm sorry. Yeah. Yeah. So again, I still think that if the crude can still run here, I'm still long a 1 lot to kind of help me pay attention a little bit, and go from there.
And we're still going to work that 3 lot up
Yeah, still going to work that 3 lot if we do happen to take out highs, because again, structurally I think the crude can go, and so coughed up what, $800 or $900 on that. That's fine. And if it goes back again, like I'm saying, I think again 20, 35, 40, 50 cents higher up to the 87, 70 levels is a very real possibility. We gave that trade reasonable amount of space considering what was at play, and the buyers who initially brought it up there, that same algo, at least initially, hasn't come on board. So we got 5 minutes till the U.S. equity market opens. We'll see how this goes. Get a little bit of a pullback in the S&P here. That sort of coincided with that move off in risk as crude is backing off as well. And there you go.
Speaking of the indexes, John, do you trade multiple future index markets, or do you mainly concentrate in the E-mini S&P versus the NASDAQ?
Oh, I'm definitely I'm an opportunist, and so for me, having the ability to come on and trade multiple products is really critical, is really important, and I think that's the way to keep yourself open to opportunities. You know, like if I didn't trade energy and there goes crude, wow, you are a dog this morning. And so if you don't keep yourself open to different opportunities, I mean, there are markets that go stagnant. We're all familiar with the implied volatility in the S&P being as difficult as it was, you know, and the realized volatility on top of that. I'm looking, of course, at gold, at silver, very active in those spaces as well. Going to keep an eye on gold here this morning. That's been a breadwinner for me in the last year for sure. Again, another really, I mean, to me, when I look at gold on these chart patterns, and for something I talked about earlier, this is an environment that, again, you want to be long. We have this longer-term uptrend. I like these reverse head and shoulder patterns. And again, with no inclination that I see that the Fed's going to back off at all, you know, we're in good shape. So that's the rub. That's my rub there. With why I think gold could ultimately head back to 1776, and then really test the highs at 1800. I think that the last week, the bears have tried to come in and really push gold down. They haven't been able to do that. I mean, we're caught between a couple of key moving averages here. Longer-term ATM trend strength higher. That's abated a little bit with this sideways action. But to me, like, you know, any break above this level, I think should be conducive for a move to head back to the upside.
Here's a question for you, John, from one of our listeners, and this one really, I can understand. The question is you're a hands-on trader, not fully automated black box or gray box by any means. The question is, how many markets do you try to trade actively at any one time? And
it seems like
trader,
go ahead.
I've gone between fully automated and I'm currently a gray box trader, and I can handle 3 at the time, stretch it to 4.
Yeah.
But you are certainly covering a large gamut of markets and situations and fundamentals. So, how many do you feel comfortable trading throughout the day?
You know, 3 or 4 it seems to be the limit. But a lot of it comes into your prep work, Doug. And so for me, having like, am I properly prepared and to handle, you know, like in other words, like, do I know where key technical levels are? Have I put the time and the homework in? Have I done my contingency planning? Okay. So when I talk to someone like, you know, a Jason Roney in the morning, or I talk to Bill Glenn, like, by the fact that, like, you know, Bill Glenn is a fixed income expert. You know, Bill Campbell, the creator of ArbSoft, you know, really understands the unique aspects of all these different treasury spreads and where there's value that exists. So by working with a team, you can, you know, by yourself, you're absolutely right, Doug. Maybe you can cover 1 market or maybe you can cover 3 markets. But when you have a field of experts around you that really know their stuff, okay, you're in a much different position to manage. And when you do this for a while, you know, for years, it puts you in a better spot to ultimately, you know, make that happen.
Right, and then a follow-up.
Some S&Ps here. We covered them up at 54 3/4. I'm trying to bid back that 5 lot to work that spread in here. Let's see if we get filled here. No, we didn't.
Okay, let's go back to the visual while I ask you the follow-up to the question is, are you also looking at how correlated these markets are in your decision making?
Absolutely. You know, you want to be aware of what sort of correlation risk you have out there, and that's an aspect that clearly is important. It doesn't, if you have small size on all these different markets, but you end up getting, getting laced in all of them, it can become one big position that's basically, correlation nearly one. So net, we're seeing some of that. We talked about that early weakness on the S&P. So I think that if we go through, let me change the screen share again, kind of walk people what just sort of happened. Share.
Okay, we've got the indexes just opening right now.
Yep. So
Russell's off 17 today.
Yeah.
E-mini S&P down a 3/4.5.
Yeah. And early on, so we lost. Let's see here. This crude. I bought into crude. Let me make sure this is done by fill time on the queue. Okay. Cool. Okay. Cool. So I sold some S&Ps at 54.75, bid them back at 53. That's going to bring us in 437-ish. I bought a 5-lot of crude up at 87.25 and sold out around 05, so it lost about $1,000 right there. Let's just give or take. So it is what it is. Just you're managing your P&L throughout the day. Crude again, sort of now ticking up higher, and we'll watch and see if this is the real deal this time.
And here's a question
Sure.
for you, John, from one of our viewers: is how do you go about determining the size of a said trade based on your feel? What determines your trade size?
Well, I give myself a risk budget every day about. Again, it's not a binary output. It's not just okay. The risk budget. Wow, crude is trying to go the other way now. Let's see what she can do here. It's not just about an arbitrary risk number. It's context. So if I'm trading non-farm payrolls, I'm going to have a different risk budget than maybe if I'm trading. If it's just a normal day with no economic data. Is there a catalyst out there that's giving you a reason to go and manage risk? If there is, that's great. If there isn't, then you want to manage your budget and volatility accordingly. So for me, it's about, all right, what's my time horizon for this trade? For me, this treasury trade sets up well for the next, day or two in terms of the next 24 hours. So it's not necessarily just about that, but it's also all right, what else am I exposed to? If the curve flattens, all right, is that technically a bearish bet in the market right now? Well, if it's a bearish bet in the market, and I'm also short crude, and I'm also short the S&P, and I'm also in some other positions, well then that flattener has a higher correlation, and I need to make sure that that's accounted in with everything else that I'm doing. That was a circuitous way of providing an answer there, but nominally, I give myself between, anywhere it could be only 10 grand for a day as a stop limit, 15, 20, 25,000. And as long as I'm making, around that or more, a number of more times, then I'm comfortable with those risk parameters.
Fair enough, and I fully understand you've been doing this for so many years that this is a calculation that you keep in your head and abide by it. It sounds like every day too.
You can look at my positions, right? This isn't rocket science here, okay? I'm on, I have exposure in the yield curve right now. I'm obviously short the Euro stocks along the S&P. There's high correlation there. There's a natural correlation with these two spreads. So yes, I have risk on right now, but it's not I'm not going to blow myself up with this trade here, or with these batch of trades. And I still have the ability to maneuver around these trades and work them accordingly. So, yes, I have risk out there right now, but it's not like anything that's going to crush me or one way or the other. Up or down a couple of K. I think that there's a good shot to be up, between really 7 and 10 grand in the next 24 hours, just with some of these positions I have out there, and just the natural ebb and flow of things. So if you factor that volatility into what I'm trying to do, my P&L highs this morning of close to 3 grand when the number came out. My P&L lows were minus 1,200. We're sitting right in about the middle part of that range right now, and that's just the reality of sort of how these things work. And let's see what crude can do for us.
Okay, we got a 22 bid.
Yeah.
21, 22 bid offer on the crude, so we're getting close to that 3-lot. Changing gears, John. Question, if you wouldn't mind going back to the gold chart.
Sure.
The candlestick.
Hold on a second.
If you could just comment on various studies that are present on that particular chart was one of the questions that came up.
Sure. I can do that. What do you got, S&P? You got enough gusto to break it through this this little pivot high there. If you do, 59 is a really great spot to sell these spoos, and I just mean like sell them outright, you know, with everything else.
55 even right now.
Yeah, 55 even right now. Probably going to battle there a little bit, and we'll see if they can, you know, outperform. So there you go. Of course, with the spoos rallying, that curve is beginning to steepen modestly, not a whole lot, but something for us to keep our eye on. Okay. All right, so back on the gold chart here. Throw a couple moving averages, have some Elliott wave, 50-period moving average, a 20-period moving average. Come on, S&P. What do you got for me? Especially if we take out overnight highs. The question is, though, are you outperforming here? The Eurostoxx is back at its session highs right now, so even though the spoos is stronger, it's on a relative basis, Eurostoxx is slightly outperforming it.
Eurostoxx on their highs.
Yeah, Eurostoxx on their highs right now. Crude kind of hanging out here. We'll see again how that trade ultimately materializes itself.
All right, John, tell us a little bit about your ATR study.
Yeah, that's the average true range study. It's again just to keep a track of volatility. In this case here, looking at I like to chart the 5-period and 22-period. 5-period being for the week, 22-period for the month. Obviously, the number of trading days in a week or a month, and just be aware of where those two sit relative to each other. Also, as a spread trader, you want to be familiar with the range of those markets, and ultimately, when one market moves higher than another market, it's there. Another thing that's important as well, Doug, that going back to your question about how I cover all these markets, is that you can set a lot of alerts with CQG, and those alerts really help me when it comes to making real-time, position decisions and working that as well. So, hey, rock and roll.
All right,
we are bid right now.
7.5.
Yeah.
S&P, crude's rolled off a little bit at 11.12 last.
Yeah. Yeah, I think I actually want to sell a breakout of new highs here in the S&P, and I'll be short just the Eurostoxx position. We do have data coming up at 10 a.m. with Philly Fed. That's obviously an issue.
John, let's take a look visually.
I'm going to sell S&Ps right now.
About that.
I sold 5 S&Ps, 57.5. Just a little, getting a little taste. Again, rebalancing some of that position there.
Let's see a visual on that, John, and explain what you're doing in the S&P.
Sure. So you can see from the order entry thing there that where CQG is at. This has been a nice overnight pop. The trend so far during U.S. equity sessions, as we pointed out, is obviously for real money funds to come in and sell that. Some early morning strength. There may be some option dynamics to play sort of driving this high early. 59 is a key pivot here. I'm offering some other levels there, or some other spots there. Boom, boom, boom. All right. Hard day's work so far after commission and slippage. I'm about break even.
And we're just starting off. So.
Well, that's why we do this. But you can't buy adrenaline, though, right, Doug?
No, but you can run out of it by the end of the day.
Oh, man. I hope that everybody watching right now is having a good time, enjoying the process here.
Here's a question for you, John, from a listener.
Sure.
Have you got the Dow Jones Eurostoxx E-mini S&P spread chart on hand? Is this a trade that you play daily or just for events? Like
this is a very specific event trade right now. I do not have the current. I have chart from the past, but I've not recalibrated it based on it's the thing with the Euro stocks and S&P is it's a chart that you need to constantly be recalibrating the ratios on it, and I do not have a current calibrated ratio chart on that. This is a pure 24-hour. You know, I think that this is going to outperform one leg versus the other position right now. But that's a great question, and in the past I've kept those more up to date. But this is not a spread I've put on very recently. But based on the option expiration tomorrow, and based on technical support, it was something that set itself up, and I'm going with it.
Okay, and then a little bit of a fundamental follow-up question here, and I'll just read this verbatim. After the election, it was obvious that the markets didn't like the prospects of the administration. Yesterday, more after the president's press conference. How does this affect the context you operate in?
It affects the context I operate in materially. I mean, factually, you know, the electorate ratified the status quo. And so when you look at what that meant, outside of the Republicans and Democrats burning the midnight oil over empty pizza boxes, I think that there's going to be a lot of concern in the market as to how efficiently, you know, we can come to resolution. We've shown, at least contextually, that the markets, you know, don't like operating with a lot of ambiguity. And right now, when you look at what that means, I think that there's a real, you know, potential there to serve as an overhang, and that's what I like to have outside of a budget resolution or of you know, Spain coming to the table to ask for a bailout. Those to me are the two macro catalysts right now that can trigger a huge short covering rally and impact risk assets materially. So it definitely plays a role. It serves as an overhang, and I think it's part of I mean, this has been taking place since October 1st. A lot of real money selling that's come in, working out of U.S. equities, working into foreign equities. Look at Hong Kong right now. Look at some of the emerging markets. And as you see, you know, the weakness during U.S. hours, you know, there's a focus on a Walmart this morning, for example. I mean, people have been selling dividend-paying stocks, and they've been doing it when there's liquidity, and that's a big factor of what's taking place during U.S. trading hours. And so, as I see, you know, how this materializes itself and comes out, that's what tells me, okay, short term, I think that this is a market that's conducive for yield curve to flatten, and it's also a market, and based on technical metrics as well, and it's also conducive to see the S&P because of the short-term metric outperform the Euro stocks. So, you know, you have Spain going on in Europe, and you obviously have our fiscal cliff, lack of efficient, speedy negotiations taking place here.
John, I've got to step away just for a few minutes, so I'm going to hand this over to you 100%. If you want to just go ahead and walk through, but I'll be back in about 4 minutes.
Thank you, Doug.
Thank you.
So again, we're you know, we've done a little position maneuvering on the S&P off that early level. I suspect, you know, like you guys have seen this chart 100 times, 1,000 times, or 10,000 times. You know, we'll probably come back to the 55 level here. We'll make another attempt at the highs, if not the highs in general. So that's the rub there. I think it's time to get out of this crude position. For whatever reason, it's just not manifesting itself. So I'm going to flatten out crude there, and do that. You can hear the Trade the News and Rand Squawk going on in the background. Wow, gold's breaking down. That's hot. I'm going to pull these offers here at highs. Crude definitely could not break highs. It went ahead and
Bloomberg Consumer Comfort Index at minus 33.1 versus minus 30.
it's over breaking down as well. A lot of stuff going on here. Let's see. We got gold. We got silver. Where can I do some damage? Looks like some damage has been done.
Gold prices resuming the downward trend seen earlier in the session. We did see a brief move up in prices following, according to CPI and initial jobless claims, but prices have now moved to a new low, down 1% at 17.
Eurostox, we're seeing that real money selling come in on the S&P here. Eurostox only 4 ticks off highs right now. It's not really what I wanted from this trade, obviously.
Down about 50 cents at 32.37.
Now seeing some other beta unwinds take place. Crude just rolled off there. What's Aussie doing right now? Oh, not too much. Yen's been a big discussion point. See what we got taking place in silver. Silver's an interesting topic. Silver's been really strong. See if we can catch something in silver here. Silver can crack through some lows. See what silver does. See the orders working here. I'm working a couple of sell stops on silver, have an offer up on crude that doesn't need to be there anymore because crude's a total dog. Taking away that buy stop on crude. Some yen orders, just doing some house cleaning here. Bid back these spoos. All right, we're back to being in there again. Gold is a total pig today, but silver's, which has been really strong, having a hard time breaking above that 32.50 level. Silver goes. Silver can just go. Silver's not going. Well. Couple of stops again. There's a bid there, that 30.26 half level. Boom. Flip some. Busted silver. Busted, baby.
China retail physical gold demand will rise between 10 and 15%, but they don't expect ETF to add significantly to demand. Credit Suisse commenting on overall Chinese effects on the gold market.
Gold's come up, silver's come off some support in there, but it's a spot that if it gets going, it could really unwind pretty hard. While gold broke hard too, down 1707.
Hey, John, it's Betty. We do have another question if you have a moment.
Sure.
It's Steve, and he said, who do you speak to for macro trade ideas?
A lot of people I talked to. Jason, absolutely brilliant. Hold on a second.
So everyone, while John's working his trades, I just want to remind you to keep your questions coming. They'll keep this session lively. We still have about an hour more of trading to go. Thanks. And since it seems we're taking a little station break here, I would like to let you know that our next webinar will be December 4th.
Sorry about that.
No problem.
Yeah, that was one of my guys calling with some perspective that I value tremendously. Okay, so looking at the S&P right now, looking at silver trade there, thought we had a chance to really let that silver sort of follow through and go. They came in and bid it up. I think if they maybe can come up and take out these lows here at 32.15 again, there's a chance to do some real damage. We have some congestion set up in silver. There's a lot of chop in the last couple of days in there. I mean, I was up significantly more than this, but I really thought we had a chance to run and wanted to give it some room to work. It is what it is. Yeah. So that's the rub. Now we've got a big impulse down. Let me put the gold chart there. So you can see here we got this big move down in silver. Like there was a chance for it to go again. Played it. Thought we can really do some damage there. Didn't manifest itself. It was a nice little breakout momentum trade. To the downside I tried to play. Didn't happen. And go from there.
Hey, John, I've got another question from Frank. He's asking if you can show us how you enter orders.
I enter orders on the CQG DOM. Hold on a second. So right here, you can see CQG, EP, so I can whatever I want to put a buy stop in, I can just work that. Sell stop, I could go down there. I want to put a limit buy right here. I cancel, right click on top of that. On top of that, pretty fluid, pretty easy to sort of grasp and understand. And yeah, that's the rub there. What's also good to know about these spreads is you can really, from being in this, I can just get a sense of how much the S&P is underperforming, and that's very, I think that's very telling for what this market is doing. We got Philly Fed coming out in 7 minutes here. Philly Fed probably should come in a little bit better, just considering some of the technical factors that were behind it. And if it does, I'd be curious to see sort of how gold reacts with a strong Philly Fed, being that gold just sort of sold off with a market that tends to be weakening as well.
All right, John. It's Doug. I'm back, and here's a question that came in 10 minutes ago. What's your long target on the E-mini S&P? What would trigger a short? And if I'm correct, we certainly you shorted them at 57.5 today, did you not?
Yeah, but I already blew out of those. I already worked back into the position to get me back to where I'm market neutral, if you will. So I shorted 57.5 and covered at 50. Where's the buy out here? 55.5. So again, just like I talked about, sort of trading the ebb and flow of the markets. Obviously, I just wish I'd have puked all of them, and how would you short Euro stocks right now? But that's the life of being a spread trader, and that is what it is. I think right now, the market is probably working off that 1350 gamma level. We're kind of trying to. We are seeing the curve coming and flatten a little bit here as we look at this the ArbSoft software. Where I'm trading, 5 year, and so obviously I'm on a flattener, so I'm obviously I'm long the 10s and short the 5s. So this is a trade that technically now is working back in our favor. and that's something that we want to see in terms of being long 10 years and short 5 years. We are seeing the S&P definitely can still underperform the Euro Stoxx. This is all very telling. One thing I like about being a spread trader is that you internalize. I believe that a lot of value comes from being transactional. Okay, and for me, the transactionality of being in these markets can tell me a lot and help me internalize my overall processes in market direction. And that right now is where I sort of stand on things. Philly Fed, if it does come positive, I don't know how much it impacts things. It should, in theory, with stronger U.S. data, be there. But I kind of think that the Philly Fed, which has been traditionally a market mover, is more of a non-event this morning. And let me check my Bloomberg calendar here. Philly Fed expectations are coming in 2.0, so we'll see. We're 3.5 minutes away from that, Doug, and we'll kind of just sit back and sort of see how things go from there. I think watching silver right now, really want to see what the metals do following this Philly Fed. Silver to me looks vulnerable. If it does come back and can crack new lows, there's a chance there to make to possibly get some follow through, considering what silver's done the last couple of days.
John, let's try to squeeze this one question in before the number comes out in 4 minutes.
Yeah.
It's who do you speak to for macro trade ideas is the question.
Yeah. Like I said, Bill Glenn, John Floyd, these are all people who write chapters in the book. Ted Mermel is a sell-side analyst over at Societe Generale, works the FX desk in emerging markets. Jessica Hoverson. I'm obviously on Bloomberg and CNBC quite a bit, so that's just those media contacts present opportunities in and of themselves. Jason Roney, who I've mentioned repeatedly, is I consider him a mentor and someone who has taught me a great deal of stuff. Spencer Staples is a guy that is just brilliant when it comes to constructing global macro trade ideas, and more importantly, the sentiment around those ideas, not only just from economic data, but just understanding exogenous events like how an election can be interpreted, like what the fiscal cliff means. These are all people that I respect immensely, and then following, then of course listening to the audio squawks that I do, Rand Squawk, as I talked about, Trade the News, both a critical part of my trading, and so forth.
Excellent. We've got less than 2 minutes before the number comes out. We've got gold, a little bit of a bounce, $1,710.
Yeah, silver, a lot of a bounce. So silver's put a nice little bounce off those lows there. And silver is a widow maker if you don't watch the size and that. Instinctively, something felt a little bit off on that. But the S&P is really struggling here. Wow, the S&P is struggling.
Yeah, silver margins over 21,000 initial, which is I think the highest I've ever seen it in that contract, which tells you a lot about its volatility.
Well, you know what they say about why are options so expensive? Because they're worth it. I don't know, something, or maybe that's just about divorce. Why is a divorce so expensive? I'm joking. I'm a fan of love. Although apparently, like when I take a girl on a date and they come in my room and they see like 8 huge flat panels, I'm not sure it's the most conducive for hey, this is my life. Yeah. Although I've heard from other people it's kind of cool. It's like, whoa, you have 8 flat panels. You must make money. It's cheaper than buying an expensive car, I suppose.
True.
Any rate, having fun. All right, we got 40 seconds till this number comes out. S&P is just tanking into this.
Yeah, off 2 points now, 135 or 1351 even.
Yeah, 25 seconds, 20 seconds.
November Philly Fed index due out in just a few seconds. 10 seconds.
2.0, what do we got here? 3, 2, 1, boom.
30 years fixed rate.
Oh, 10, that was a horrible Philly Fed. That was a atrocious Philly Fed. Horrible Philly Fed.
Metals are showing a little strength.
And fixed income, yeah, that should,
Prices paid 20.
SPU's getting crushed, curve flattening.
Minus 6.8 with minus 10.7.
Now we'll see what silver and gold does.
They're a little undecided right now in the metals.
They're coming to get a break out of that component.
Overall, we were expecting weakness following Hurricane Sandy.
Related ticker so far. New orders,
S&Ps.
Yeah. Yeah, again, how this curve doesn't flatten over the next 24 hours here, we'll see. Prices played, number of employees, minus 10. Prices paid, 19. Delivery time, I'm going through the Bloomberg-related tickers right now and just reading off all the metrics from this. General activity, minus 10. Yeah.
All right, John, as we digest these results here, I'm going to take the last question out of order. And the reason I'm doing this is because when John and I spoke a few days ago, and, you know, for many years I had heard John had written his first trading book at the age of 13, but John corrected me the other day and said it was actually I read my first trading book. And, you know, since that point, John has been in the markets since an early age. John, tell us about
I'm lining up on this spread a little bit. I just reduced it by a third.
Go ahead. I'll come right back to you.
Whoops, that's not what I wanted to do. Okay, that happens sometimes. We've all been in that spot. Don't want to be short right now. Wow, that's hot.
Metals are holding their own, undecided still. Crude near its lows, 86.44. And the index is possibly turning around, coming off their lows.
Yeah. This is real stuff. I want to go from a
okay, so we're getting 51 quarters, 51 evens.
This is not. Okay, give me a second here. This is awesome.
Tell us a little bit about what you're doing here, John.
So I'm working a position, so let me focus for a second. All right.
I know it's hard to concentrate when you're also putting on this presentation.
Yeah, dollar at highs right now. Okay. Okay, there we go. Now I'm back to where I want to be. All right. Okay, that only cost me like friggin' $800,000. Woo! Yeah. Anywho, so yeah, everything I made from ebb and flow, and I just gave back there in that fast market, working some positions off. Fair disclosure. So curve is flattening a little bit, which is cool. Keeping an eye on metals. Looking over at gold right now. Let's see, GCE. Take that down. Gold 1710. Right now you're seeing gold off its lows.
Gold and silver undecided through the number. Not much change there.
Yeah, not much change there. So we're back to, you know, still a long S&P short Euro stocks curve flattener. And rock and roll. What is crude doing right now?
Yeah, we did see U.S. equity markets quickly move to new lows following the weaker than expected Philly Fed. We have since rebounded back into positive territory for the S&P minis. The NASDAQ 100 futures down a full point.
Well, silver's well off its lows. Keep an eye. Alex, set an alert on silver. Keep an eye on that for me because I'm taking it off the screen. 32.25 on silver. If it gets back there, holler. Scream at me, okay? Again, Now if we actually, like, to me, like if we could hit 63 in the S&P, that becomes like a nice sell. I mean, I know we broke new lows, and if we can manage to get new highs, I still think, for all the factors I talked about earlier, there is, you know, some overhang that's going to, you know, provide some opportunity to maneuver around those positions.
All right, John. Let's finish up on that question.
Please.
First book, 13 years old. Just you've written one book, and you've got one new one due out next year. Why don't you tell us a little bit about the new book, and what is protean?
Yeah, protean means easily adaptable, able to take on many shapes and forms, highly versatile. And when you think about the markets and what they represent and what they encompass, there's a real aspect to be a protean trader. So as we've just talked about, taking, you know, being aware of key technical levels in the market, sentiment, fundamental analysis, long volatility, short volatility, trading outrights, trading spreads, being open to come up with creative ways to express your trading style and opportunity. And for me, you know, using these strategies has provided a robust means of making money and supporting myself. I live off my P&L. What you see here is really what I go through every day. And if I make money trading, I live, and if I don't, then I don't. But thank goodness that hasn't. I mean, I live still. I guess I'll go hang drywall somewhere or something.
But chips for tomorrow's game, right? That's our goal here, is to make sure that we can come back to the table. Exactly.
Always leave chips for tomorrow's game. So risk management's, you know, really critical in that regard. And that's the rub. So nice move up here in SPOOs. Nice little buy. Maybe some of that flush that we got, that, you know, took care of that. But again, like, to me, would really love to see S&P get up to like 62, 63 here. That'd be nice. Nice little bounce pop there in silver. Looking at a move up in gold, as we're seeing that move in gold back to 1714. Overall, it's an interesting thing to watch take place. Let's see. Crude's been very enigmatic today. Thank you, crude. Love that P&L. Appreciate you, buddy. So something you can do on CQG, if I go to the summary here, just kind of keep an eye on sort of where your P&L is, where your winners are, where your losers are. Can see in real time about $600, $800, sort of often like $200 to $300 a tick is kind of where we seem to be right now. You know, the Treasuries, TY is 687, gold up 1220 on, crude down 1790. Euro stocks down 1550, and you know, Jason Roney in his chapter, he's writing a chapter in the book, really talks about like how important is the journal, how important is to keep a robust journal entry, because your P&L can tell you a lot about the markets right here. So what can we look at just from my P&L that can lead to other trade ideas? Okay. All right. Well, we're seeing that, in fact, that the curve, you know, has done some flattening this morning. TY is doing well. The 5 years, you know, a little bit different. Okay. We also know the S&P, you know, in terms of looking to play that long gamma position off 1350, that's also worked out well. I mean, we've had two tests there. Both times they've been, you know, more or less robustly defended. All right, and then we have the Euro Stoxx 50, which you know, we've been short today as part of the spread, which has not done well. So the, you know, Europe outperforming U.S. theme has continued to play out here. The ability of crude to not reconcile itself or breakout has also played out, obviously trying to play a move in crude higher on, you know, through that key level, didn't manifest itself, and so that's something that's important. And overall, just from looking at the P&L here on CQG, you can chart, you know, what the message of the markets is this morning. I think it's a very telling message. We'll see as I stay long S&P and short Euro stocks, how this trade continues to work itself. We're in 2/3 of the position we were earlier, and play from there. Yeah, that was nasty. Jason just sent me an IM.
All right, let me interject here. The book that will be coming out in 2013 is called The Protean Market: Global Macro Strategies for Traders, Investors, and Advisors.
Yeah.
And we've got quite a few questions. If I don't get to every one of them today, John, can you give everyone your contact information and any websites you might?
Let me go to screen sharing again. Let me put that up. Let's see here. and that's theproteintrader.com. You know. Nice work, mate.
Now, is there also a website,
www.theproteintrader.com,
okay.
And that's where you can learn about all the all the expiration supply demand 101 for sure. Yeah. So one thing we want to keep in mind is that, you know, every time the S&P goes down to the 1350 level, you want to keep on, you know, just being aware of that it loses gamma each time it goes down there. And we talk about gamma, what I mean is that, you know, the strikes on the S&P 1300, 1325, 1350, 1375, 1400, these are all popular strikes that generate a lot of open interest. And as a result of that, the market sort of in a magnetic way, like just like we spent 4 days up near 1375, the market tends to gravitate to these based on the optionality behind them. And so you'll see, you know, a lot of delta hedging go on around these strikes, meaning that, okay, if I'm long the 1350 puts, we get down there, I can now, you know, delta hedge with my at-the-money calls and really play the gamma behind those positions. And so that's what we see developing with option expiration being tomorrow. And, you know, I wish that, you know, of course, as a trader that you would monetize things better, but, you know, you do what you can. And I lost some slippage there when I was working out of some of these positions and got a little bit distracted and regained the focus and went from there. But, you know, that's part of life, and that's what you do as a trader. So that's what I mean by that. The Q&A, again, just keep asking questions. I'm you know, waiting for, if we can get a move up in the S&P here at literally to new highs. I think that, you know, the next 24 hours will determine the trend. You know, what we see tomorrow, Friday, and Monday will really give us a feel of where the market's going in the next 2 to 3 weeks. If the market smells out that these negotiations are not as fluid and not as open-ended as we've been led to believe from our various political leaders, things could get nasty fairly quickly. So I think that it's important to keep an eye on that, and until, you know, whether we get a resolution in Spain or a resolution in I'm gonna flip some spoos here.
John, let's go back to your screens, your actual trading screens, and
yeah, working on Eurostocks. I'm gonna try and
here.
Yeah, it is. Come on, you little whore. Sorry, I meant you guy. You.
Now, this isn't a family show, but
sorry.
I understand those words can come out. So.
Okay.
So take us to one of your trading screens too, John.
Okay. So what? I'm sorry. Let me file. Okay. Rock and roll. Want this curve? Come on, baby. Flatten for Papa. See, Treasury's kind of catching a bid now. Those 10s are now firming up a little bit in here.
Okay, this question's come up a number of times. FYT looking good. They want.
Yeah.
The questions are exit points, or do you just want to ride it out?
43 basis points on the downside. If we get back to there, if we get above 45 contextually, I may actually sell more. I may get out. Honestly, because I want to know like what the metrics are for the move up. Okay, if we're up at 46 basis points and there's been no economic data and it's more of a, you know, just a market, you know, market price action, then I may add to it. If, however, we are getting a sentiment that people are looking to get out of the long end of the curve, then I'll just blow out completely and not even take on any more risk. So there's both a technical and a fundamental aspect behind this. My sizing in it right now is, you know, I mean, I'm literally in 4 units right now with a 21-33 ratio, you know, with 5 to 8, basically 5 10 years for every 8 5 years. I'm not in like, you know, I'm not swinging, you know, 200 by let's see, 200 by 320. So it's as long as it kind of stays like it is now, and I think it can gravitate low over the next 24 hours, especially with the Philly Fed, the employment component of the Empire survey that came out. The Fed buying the long end of the curve today, I think this flattener is the way to be positioned today and for the next 24 hours.
Excellent. And this question is going to cover a number that have come through. And a few years ago, this would not have been an important question, but of course, with recent events, I can see why it's so popular. The question is, who do you clear through? A number of viewers have
Sure.
have mentioned, of course, losing some money with the last two debacles, and you know, how comfortable do you feel with who you're at with right now?
Yeah, I'm at Advantage Futures, and for me, you know, Joe Guinan heads up at Advantage Futures. I have a tremendous amount of respect for him and the people over at Advantage Futures. You know, I've done a lot of due diligence in terms of how they custody their funds. I'm very comfortable with that process. And of course, I say that the curve we begin to steepen again. Wow, that was amazing timing. So as I look at you know, where you custody funds is obviously a big issue. Advantage, you know, the last time I checked and inquired, does not own any peripheral paper or sovereign debt. That's a big deal there. And net, I think that there's a lot of good things in terms of how they run their business from a technology perspective. I've been there for 5 years now, and I've made a lot of money trading, what I consider a meaningful amount of money trading through them as my custody, as my clearing guy. In terms of, there's a couple other questions you asked me, Doug, and I feel like obviously my focus on the markets and trying to generate P&L, so if you have to repeat them a few times, go ahead and do that. I'm trying to, you know, provide as much insight as possible, and at the same time, you know, first and foremost, generate P&L. As I imagine most people on here watching are all traders, they can appreciate the aspect of that in trading.
And here's another question that's gonna wrap up a few that have come through. Do you use the stops in CQG or any type of the exotic order types that CQG has?
Pretty vanilla in that regard. When it comes to economic data, I may get a little more exotic, but net, I'm very buy stop, sell stop, buy limit, stop limit, in terms of working that angle right there. So yes, as I showed on the DOM a little bit earlier, let me get this. Which screen are you seeing right now, Doug?
We're looking at the three gold charts at the bottom.
Okay, let me go back to whoops. Okay, stop sharing. Okay. So let me put this back on here again.
Okay, so now we're back with the FYT and the green chart.
Yeah. I'm going to take this out of page. Boom. So like I showed, you know, here's a crude chart. Like earlier we had a silver trade that set up, you know, it didn't follow through, but net, like if I want to put a stop in on silver, very easy, just bang right click, sell stop, bang right click, sell stop, bang right click, sell stop. You know, no, I don't like that, bang cancel all, done. Okay, like it's a pretty quick and seamless. It allows me, and I can put, and I have 6 of these on my other screen. Okay, and that really allows me to say, okay, what's going on with this? You can see the FI. You know, just throw those in there, bang. Bang, my TY position right now, long 21 TY up 687, monitoring that. So we got over here. There's a 5-year position right now where I'm short 33. So I have 6 DOMs and then 4 tabs on each DOM. And so just keep an eye, itemize P&L. Of course, I can go into the options and change those if I don't want to see my P&L per contract. I like having that. Just sort of keeps me aware of it, tells me a message of what the market is telling me to do, and that's a good thing.
And let me make a point here. Even though Advantage Futures is John's clearing firm of choice, mine has been eFutures over the years. We at CQG carry connectivity to 70 plus FCMs out there, and it's you know, certainly everybody's a little on edge of how comfortable they are where they park their money these days, and that's certainly understandable. But we're not trying to play up or downplay any clearing firms at this point. And I hate to have to put that disclaimer out there, but of course it's
a great disclaimer, and you're obviously FCM agnostic, and that's what I love about CQG is that I can have an account at a new edge where I also execute some trades, and I can just simply use the drop-down menu, and now I have my trades at New Edge. I can copy them. I do the give-up agreement between New Edge and Advantage and send them over, and that's something that, you know, that ease of use, because it's, in a lot of cases, it's not just your trading strategy that determines how much money you make in the markets, but, you know, what sort of capacity it has. And that's when it comes to, you know, generating alpha. The less time you have to spend on administrative-related efforts, the more alpha you can probably generate as a result of that.
Right. And here's a question from a few 30 minutes ago is what makes you take a break? I take that as a breakout in the market, positive or negative P&L levels. And in truth, I've never thought of it that way, but is that something that resonates with you? Do you look at P&L when you decide to take a break out on a trade?
The P&L is more of a retrospect, and like right there I just did a retrospect in the market up until now. What are our winning trades today? What are our losing trades today? And then can I extract a message out of that? Okay, from being transactional, what have I learned about those respective markets? And as I sit and look and have to extrapolate from a global macro, from a short-term macro perspective, and this is like macro is supposed to be big picture, but many more funds are now becoming, crude just broke some new lows, many more funds are now becoming much more tactical just from the nature of it. I mean, we're looking at a 3-year period now where global macro has just gone through like the worst 3-year performance, I think, since the mid-90s. And so what you have to do, I believe, is understand from a sentiment perspective what is driving the market from both a technical, fundamental, and sentiment perspective over a 24 to 72 hour to 96-hour time period. If you get that, there's a lot of opportunity that can encompass a much different risk profile, and it's a risk profile that I find popular and that's conducive with my personality. So when we talk about breaks in a market, the P&L is just simply a reference point, but the breaks themselves are more indicative of technical and fundamental drivers that are conducive. You want to look at volatility, look at the ags back in June and July, okay, and how they traded, and just what the overarching themes were driving those markets. I think you'd say right now that it's going to be very difficult, I think, until there's a resolution with Spain and Europe, and until we have a real sense that the fiscal cliff has been solved, and more important than that, because the market will smell that out if they get to a resolution well before it's announced. But is there real progress and headway taking place by both parties? And I think that's the rub that you want to have in mind as you watch this stuff, and it may not necessarily happen. And I don't get any sense that having an EU-style summit like the president's done beginning yesterday with various civic leaders coming out, and you announced $1.6 trillion as your first offer to sort of and tax increases, is very conducive for a negotiation to end anytime soon. I think what you need to do is get the Republicans and the Democrats in a Marriott hotel, like in a 3-star hotel, and lock them in a room and bang it out. And until the market gets the sense that sort of earnest negotiations taking place, other than lip service that's provided, the president's mandate, I think, will begin to wane as the days go on, and the two sides will harden their positions and viewpoints. And as long as that's the case, I think that selling rallies at key spots in the S&P technically will continue to work. Because there's a very real sense that dividends are going to be, taxed higher, and real money is going to use the U.S. equity hours and rallies within that context to sell those markets off. And that's how, I'm trying to position myself outside of certain exogenous events like the one we talked about with the 1350 gamma spot being what it is.
Right. And this is off a question from one of our listeners and also me expanding on it. We talk about, or you mentioned resolution a number of times in Europe. I think of resolution, as we've seen in the last few years, as additional bailouts. No,
I'm sorry. I need to clarify that. What I mean is by Spain coming and asking, specifically Spain coming and asking for a bailout. That hardly is a resolution, but it's something the market is keenly awaiting. And that's just like the next step, if you will. And I think that the more days go on, that the Spanish do not come and request a bailout, and frankly, they've been allowed to behave this way because the ECB and the EU have empowered that, have enabled that behavior. So good for them. Good for the Spanish. You know what I mean? Get what you can, boys. But what it means for the rest of the market, I think, is more dynamic and needs to be factored in when trying to understand why it's been so difficult to get a meaningful trend and why so many global macro funds have struggled. It's because of a ton of uncertainty, but that uncertainty creates opportunities for traders like us who can put out more creative trading strategies.
Here's a question that just came through. Of course, knowing you the number of years, you are a relationship trader. This question is, do you have profit targets throughout the day? And because you normally do trade relationships, are you, I guess, scaling out of maybe legging out of a relationship versus holding it to the end or riding one leg after a certain point's met?
Yes and no. It's something that you know, like I said for this flattener. Hold on.
Computer issues affecting some flights.
All right, that was just a story on United Continental computer issues. Yeah, you know, again, I look at targets from both a price and time perspective. You know, like how long am I in this trade? And you've heard this said from you know, if you read any Market Wizards book or I mean, you know, people talk about, well, I like to trade to exhibit certain price behavior aspects, and I also like to trade from a time perspective. If I'm in a certain amount of time and it hasn't done what it's supposed to do, that's probably not a good sign for me, and not something that I want to, you know, be conducive with. You know, this morning, I think the crude trade was an example of that. Once it hung out near the highs for a while, but then couldn't break up, you know, we made a graceful exit and did our business, because after that time it couldn't break up, it started to break down. Was there just wasn't conducive for that. Net, I think if you keep, you know, the context in mind, again, like, and that's the hardest thing as a discretionary trader. Like, it takes an immense amount of discipline to manage risk, understand your risk budget, put price targets out there, have a game plan. And for me coming in, you know, wanting to be, you know, in a yield curve flattener, wanting to, you know, play off the 1350 gamma level, but not necessarily be long risk, but at least, you know, try and play on that, you know, market microstructure, if you will, and then ultimately benefiting from some price discovery as a result of jobless claims and the Empire survey, were all things that I wanted to do. And then also, if we went higher, to then reposition, reconfigure myself on the long S&P side to take advantage of some of the real money selling if we did bounce. This is market behavior that's more indicative of a rotational day, as my good friend Robert Baxter likes to refer to, someone I rely on rather extensively. So it's these are all aspects, and this is all why I wrote the book, The Protean Market, and why everything I'm explaining now, obviously over 400 or 500 pages, will make a lot more sense with more numerous examples, but this is more of a real-time, in the heat of the battle sort of thing today. And I've had a blast. I hope everyone's had a great time.
And here's a good follow-up or wrap-up question, since we're getting near the end of our presentation. What's a good P&L for you for the day, the week, month? Percentage of your capital investment is
yeah, I have $1 million trading level, and so for me a good month is if I can pull down 150,000 on that. I've averaged this year, let's see, like 75K a month. So, you know, for a day, I've had a couple. I don't know. I seem to get 1 or 2 days a month above 25,000 that I make. I've puked more than that twice this year. Let's see, and then lost 47,000 one day, and then I've made 47,000 one day, and then made in the 30s a few times as well. So again, the context of the market plays that. But up on the year, I'm up like 650 on the year, or 630,000 on the year so far, 640,000, somewhere in there on the year. And that's with a max drawdown of like 65,000 is my max drawdown on that. So that provides some context of what I'm looking to achieve.
All right, we got one question I think we can squeeze in before the end here that just came through, and this is a pretty narrowed question. Please comment on the dollar direction.
Yeah, the dollar is something that we're part of a huge debate right now, and you always wanted to find the dollar against what. I think when I look at what's setting up next year, you know, the yen is potentially the trade of 2013, and by yen I mean being short the Japanese yen, because you're looking at, you know, obviously all sorts of macroeconomic variables which have been at play the last couple of days, with Parliament being dispatched and having new elections, and so when you think about what will happen if Abe comes in December 16th or December 18th, we got a crude inventory numbers about to come out, December 16th or 18th. And look and have an inflation target of 3%, and the BOJ for the first time ever is eased on back-to-back occasions, you have the metric for the yen to really be like USD JPY to be up at 91 or 92 by the end of 2013. And I think that, from a risk-adjusted basis, is really going to be the trade of 2013. And ultimately, that dollar part of that should do very well. Now, the dollar against the euro, different aspect there. Oh, natty gas came out. Okay, minus 18. Less than expected. Rand Squawk and Trade the News both calling that out, and Bloomberg as well. All right, and that's the rub there. So I think the dollar, it's about the relationship. I think dollar versus emerging markets, just the way the Fed has structured themselves, and I believe will continue into 2013, is going to, be bullish for EM currencies. In terms of dollar versus developed, G7 currencies, a bit of a different aspect behind it. As a Q1, I think, can be fairly weak economically, and that should probably keep the dollar bid against euro and against the pound, and that's my take on the dollar.
Well, John, I'd like to thank you for your time this morning. This was actually a lot of fun, and I'm sure our listeners felt the same way, especially with all the good questions that's come out. For any of the questions that we did not get to, please contact John with the information that was given earlier. And John, if we could certainly set these up periodically throughout the year, I think it would be a benefit and something fun to do for our viewership.
Oh yeah.
Any closing words before we shut down here? We got the tidbit on the dollar. Do you have another big trade for next year that you're watching set up, or?
Really right. To me, I think there's a lot of the next 2 days, guys. You really want to pay attention to what comes out of Washington, because that's going to ultimately set the sentiment and set the pace for how these markets move. And as a result of that, that's what you want to be paying attention to. And for me, there's a lot of opportunities markets right now. Obviously you want to extract as much as you can, and hopefully by the end of the day and by the end of the week and end of the year, good times continue. But reach out to me. There's my are we showing my contact info right there now, Doug? Can you see it?
Yes, we're back on that page, John.
Okay, let's see here. Boom. Yeah, there it is right there. CQG's number right there. There's my number. There's at least my admin section. Get a hold of the Protein Trader. Love to hear from you guys. Always love talking to traders. Love trading. Love these markets. And it's been an honor to have had the chance to share my insights this morning with you guys. And I appreciate you showing up, and I appreciate the questions.
And as I said, we are gonna work at getting you back on sooner than later, because this was a lot of fun up and down for the last hour and a half. So.
Doug, thank you so much, my friend. I'll talk to you soon, buddy.
Hey, you too, and thank you everyone else for tuning in. We will update you with this presentation. It is recorded, and it will be posted to our website within a few days. Thank you very much, everyone. Good trading. Bye.